Dan Ives of Yorkville Ives writing the following: the Capex tug-of-war between SpaceX and investors is a necessary build-out that will require patience. Dan joins us now for more. Dan, whose patience and how much pain will we see for the stock in between?
Look, I think this is a barometer for what we're seeing across tech, because the reality is this is an arms race. And when you think about what SpaceX is doing, the only way to get there is Capex. And I think that's the double-edged sword as going public, because the scrutiny is going to be there. But look, we've seen it across big tech, when it comes to the hyperscalers on a different version. That's essentially what's happening with SpaceX, as they're trying to catch up to OpenAI, Anthropic, and as Lisa talked about, really building out the vision.
Do you think that this is the right move, Dan, to really lean into the hyperscaler side of things, the compute side of things, when really the money is coming from the space and the telecom sides of things?
Yeah, I think that's the quagmire that they're going through. And look, it's no different than so many other companies that we've seen. You go back to NVIDIA, right, where it's gaming and then going after AI. The reality is that the gold at the end of the rainbow is around data, AI. It's going after that opportunity. And I think that's what they're doing. It speaks to XAI and ultimately what probably could be Tesla as well. That's the broader vision of Musk. But the only way to get there is Capex. And I think when you're going through this arms race, where and you see it from all the chip players, all the memory players, costs are getting more expensive. And you're not just one of one in a room, you're one of many trying to get after those chips in the build out.
Dan, if you were trying to figure out where you were going to lend your pool of cash, why would you choose SpaceX for some of those data, AI, LLM types of promises and dreams, rather than either Anthropic and OpenAI on one side or Microsoft and Amazon on the other?
Oh, no doubt. They definitely are at the low end of the totem pole relative to those players. And I think that for them is the challenge. The hyperscalers, if you just think about this earnings season, they come out flexing muscles relative to what we're seeing. And when you look at OpenAI and Anthropic, it's really their world. Everyone else is paying rent. Everyone's trying to play catch up, and that's the challenge. Now, for Musk, he's been there many times before, but that's really the opportunity. If anyone's buying into SpaceX, you're buying Musk, you're buying the vision, and you're playing catch up.
The price of capital, Dan, for these guys is going up. It's higher. In the next hour, we're going to have a conversation around this table about how rate insensitive these spending plans are. But I do believe everything's got a price, and at some point, Dan, there is a price at which these companies are no longer willing to pay. Are we close to that, Dan, where markets and the pushback, whether it's equity or whether it's debt, begins to dictate or even influence the spending plans of these companies?
Look, I think right now, I think Oracle will be a great example, relative to the OpenAI deal and just taking on debt and what's happened to that stock. Look, I think for these companies, it's a balancing act, because they know if they lighten up on Capex, they go to the back of the line. And it goes back to this is the building of the Vegas Strip, 1955.
Well, Dan, I think that's the issue, though. Just allow me to jump in. Why do you want to buy them as they go through that difficult phase? Why do you want to be buying them now?
I think if you look at Microsoft and you look at Alphabet, those are two good examples where, as they're going through it, you're basically in the build-out phase. Investors now, the switch has gone on. You've actually seen the monetization. I think the question, John, is that when do you start to see the monetization switch? And investors are basically betting near-term pain for long-term gain. But there is a push-pull point. And I think as we get into the debt market, these companies take on more debt and more equity. I think Meta is a great example. You have to show it. You can't just talk it. Alphabet, Microsoft, you look at Amazon, I think you got to prove it, because it can't be the dog ate the homework every quarter.